Welcome to the midweek edition of Daba Markets Talk, where we break down the stories shaping African markets and explain what they mean for investors. Today, we are looking at an IPO that was supposed to remain open for more than 2 weeks, but sold out in less than 24 hours. Bank Group Côte d'Ivoire's public offering opened on July 20th, 2026, with 10 million shares available to investors. Before the first subscription day ended, investor orders had covered all the shares on offer. The transaction was scheduled to run until August 6th, with an option to close early once the available shares had been subscribed. That early close condition was triggered almost immediately. The speed of the sellout places Bank's IPO among the most closely watched transactions on the BRVM this year. It also raises several questions. Why was demand so strong? What were investors buying at the offer price? What happens to investors who requested more shares than the market can allocate? And what does the sellout tell us about demand for African public market opportunities? Let's break it down. Bank Group Côte d'Ivoire's majority shareholder, Bridge Group West Africa, offered 10 million existing shares at a fixed price of 6,150 FCFA each. The shares represent 20% of Bank's capital. At that price, the total offer was worth 67.5 billion FCFA, or about $118 million. The offer valued the entire bank at 337.5 billion FCFA, based on its 50 million shares outstanding. The shares are expected to list on the BRVM, the regional stock exchange serving the 8 member states of the West African Economic and Monetary Union. The transaction gives public investors access to a bank that has spent several years expanding its balance sheet, earnings, and customer activity. Bank was founded in 2006 and operates as a universal bank. It serves large companies, small and medium-sized enterprises, public institutions, financial institutions, and individual customers. The bank has built a strong position in corporate banking and SME financing, which gives it exposure to business growth in Côte d'Ivoire and the wider region. Bank entered the IPO with an established financial record. At the end of 2025, the bank reported total assets of approximately 1.427 trillion FCFA. Shareholders' equity stood at about 105 billion FCFA. Net banking income reached 67.8 billion FCFA, while net profit was 27.2 billion FCFA. Return on equity stood close to 28%. That means the bank generated around 28 FCFA in annual profit for every 100 FCFA of average shareholder capital. Between 2021 and 2025, Bank's net banking income grew at an average annual rate of 17.5%. Gross operating income increased by an average of 17.7% per year. Net profit expanded by approximately 15.8% annually over the same period. The bank also carried that momentum into 2026. In the first quarter, net banking income rose 23% from a year earlier to approximately 16 billion FCFA. Net profit increased by 48% to around 8 billion FCFA. Those figures help explain why investors paid attention to the offer. Bank was not entering the market as a business dependent only on future forecasts. It was offering investors ownership in an institution that had already reached scale and demonstrated earnings growth. But strong demand does not automatically mean the stock was cheap. At 6,050 FCFA per share, Bank was valued at approximately 12.4 times its 2025 net profit. Its price-to-sales ratio, using net banking income as the closest banking equivalent of revenue, was about 5 times. Its price-to-book ratio was around 3.2 times. In simple terms, investors were paying 12.4 FCFA for every 1 FCFA of profit generated in 2025. They were also paying more than 3 times the accounting value of the bank's shareholders' equity. That is not a distressed valuation. Bank was priced as a profitable bank expected to continue growing. The premium rested on the bank's ability to preserve high returns on equity, expand earnings, and control credit risk. The official prospectus used 4 methods to estimate Bank's value. These included comparisons with listed companies, comparable banking transactions, discounted dividends, and an excess capital valuation. The methods produced estimated values ranging from around 316.7 billion FCFA to 378.7 billion FCFA. The IPO valuation of 337.5 billion FCFA sat close to the middle of that range. Investors were therefore not being offered a wide discount to the valuation presented in the prospectus. They were buying at a price broadly positioned as fair value. So why did the offer still sell out so quickly? One reason may be the limited supply of new listings on the BRVM. Investors do not often get the chance to subscribe to a sizable bank before it begins public trading. The offer gave individuals and institutions access to only 20% of the company, creating a fixed supply of 10 million shares. Another factor may be Bridge Bank's earnings record. The bank's profit growth, 28% return on equity, and 1.427 trillion FCFA balance sheet gave investors a clear operating history to assess. Dividend expectations may also have supported demand. Bridge Bank has historically distributed a portion of its earnings to shareholders. The prospectus indicated an average payout of around 50% of net income since 2022. Based on 2025 earnings of approximately 544 FCFA per share, a 50% payout would produce an illustrative dividend of about 272 FCFA per share. At the IPO price, that would represent a gross yield of roughly 4%. A 65% payout would result in an illustrative dividend of around 354 FCFA per share, or a yield slightly above 5%. These are not promised dividends. Actual distributions will depend on profits, capital requirements, provisions, board recommendations, and shareholder approval. But the possibility of combining dividends with earnings growth may have appealed to investors with a long-term view. The wider BRVM environment may also have helped. After a period of market gains and growing interest in regional equities, investors have been looking for new ways to put capital to work. A new listing can attract attention from people who already invest on the exchange, as well as first-time investors drawn by the visibility of an IPO. The Bridge Bank offer also showed the importance of access. Public offerings can be legally open to investors while remaining difficult to participate in because of onboarding, funding, and subscription procedures. Through Daba, eligible investors were able to discover the offer, complete account verification, fund their accounts, and submit subscription requests through a digital platform. That type of access matters when an offer closes in less than a day. An investor who only begins account verification after subscriptions open may miss the opportunity. A verified and funded account allows investors to act when a new offer becomes available. The sellout now shifts attention to allocation. An investor who requested shares is not guaranteed to receive the full amount ordered. If total demand exceeded the 10 million shares available, the offer was oversubscribed. The allocation process will determine how many shares each investor receives. Some investors may receive their full orders, others may receive only part of the number requested. Any funds not used because of a reduced allocation should be returned according to the offer procedures. This means the amount of money committed during the subscription period may be greater than the final value of shares allocated. Investors will need to wait for the final results before knowing the size of their positions. The next step will be the stock's listing on the BRVM. Once trading begins, the market price will no longer be fixed at 6,750 FCFA. It will be determined by supply and demand. The shares may rise above the IPO price. They may also trade below it. A sellout in less than 24 hours does not guarantee a first-day gain or strong long-term performance. IPO demand can be driven by several factors, including limited supply, institutional orders, dividend expectations, and hopes for short-term price increases. After listing, Bridge Bank will still need to deliver results. Investors should monitor net banking income, profit growth, return on equity, loan quality, regulatory capital, and dividend payments. Credit risk will be one of the main areas to watch. Banks generate income by lending, but some borrowers may fail to repay. If defaults rise, Bridge Bank may need to increase provisions, reducing profits and potential dividends. At the end of 2025, its net impaired loan ratio stood at approximately 3.8%. The bank will need to preserve asset quality as it expands its lending activities. Liquidity will also matter. Even when a company performs well, its shares may trade infrequently. Investors may not always be able to sell the number of shares they want at their preferred price. The IPO involved a public float of 20%, but the volume available for daily trading will depend on how long allocated investors hold their shares. Another detail investors should understand is that this was an offer for sale. Bridge Group West Africa sold existing shares. Bridge Bank did not issue new shares, and the 67.5 billion FCFA in proceeds will go to the selling shareholder rather than directly into the bank. The listing still broadens ownership and subjects Bridge Bank to public market reporting and governance requirements. But investors should not treat the transaction as a direct 67.5 billion FCFA capital injection into the bank. So, what is the main takeaway? Bridge Bank's IPO selling out in less than 24 hours shows that investor demand for new BRVM listings can move faster than the official subscription calendar suggests. It also shows that there is demand for access to profitable African companies with established earnings and dividend potential. But the speed of the subscription is only the beginning of the investment story. The final outcome will depend on how shares are allocated, how the stock trades after listing, and whether Bridgebank continues to meet the expectations reflected in its valuation. For investors, the lesson is to prepare before an IPO opens. Complete account verification early. Fund your investment account. Read the offer documents, understand the valuation and risks, and decide how much exposure fits within a diversified portfolio. Daba helps investors move from hearing about an opportunity to being ready to participate when it becomes available. That preparation matters when an offer scheduled for more than 2 weeks disappears in less than 1 day. That is all for today's midweek edition of Daba Markets Talk. For more coverage of African markets, IPOs, stocks, and investment opportunities, visit Daba and follow Daba Finance across our social platforms. Until next time, keep learning, keep investing wisely, and keep building for the long term.